Yeah, hello, traders and investors. I'm Ellie Little, and this is your daily NeoTA wrap, where we take a look at the markets from a neoclassical perspective. And what does it mean neoclassically, right? We're looking at supply and demand on the charts. We're looking at qualified trend, right? We got to have direction, and we got to have timing. We find what's significant on the charts. We watch the tests that take place on those areas. We know the probabilities. We use that to get better timing in the direction of the trend. I do this show 4 times a week, every Monday through Thursday, broadcast at before 10 o'clock Eastern Time and archived on YouTube. If you want to get subscribed to the show, just reach up in the right-hand corner, click on the button there. Anytime I push content, you get a notification. As far as what's happened in these markets, let's take up the numbers real quick. Today, you got the laggards really picking up the pace and trying to catch up with those that have been leading. In particular, I'm talking about big cap technology. NDX up 1.25%. That drove the gains on the broad Nasdaq. You can see here on the Russell, underperforms again. That's 2 out of 3 now. Dow Jones another 0.5%, and the S&P, where's the S&P? 0.65. So NDX, big cap technology, they came running out of the gate today. At the end of the day, we saw some give up, right? We had this nice big spike up during the day, and then you saw some give up at the end of the day. Got fed tomorrow. Maybe that's part of the reason there. But when we look at the charts, there's nothing on these charts to tell us that this thing's going to die yet. But I'm going to call your attention to some things that might suggest that's going to happen. But before I get there, let's finish up here. Gold, silver, both down, oil up again. Bonds actually held the bid today. Dollar was down, reversed. Let's look at this. You know, in neoclassical, we use ABCD structures for projections. That's kind of a classical tool. It's been used elsewhere. It's not something we invented, or I should say I invented. I borrowed it. Though we've got 2 or 3 things like that we've borrowed that we use. This is for projections. And why do we do it? Well, because they're pretty good. They give you an area to think about where things are going to go to. Dow Jones Industrial on the daily time frame here has met its target. Met it today. 911. The target was 910.74. On the weekly, it's almost there as well. Right at 20,000, 5 points short, or actually 4 points short. Almost there. Look at the S&P. Only another 2% to go. And matter of fact, if that's on the daily now, if I bring the S&P up and look at it here on the weekly, right? On the weekly, this thing's only 2% to go. If I bring over some of these others, like the Nasdaq, right? On the daily on the Nasdaq, 2%. On the NDX, 0.5%, 2%. Folks, we're getting very close here, right? We're getting to that point where we've just about met our targets. Look at the volume surge into the Dow Jones. I'm beginning to wonder if that's correct or not. That can't be real. Maybe it is real. I'll have to go double check these numbers. I don't look at the Dow that much, so I'm kind of surprised at how big this volume surge is from December 5th on. Well, I'll take a look at it. But irregardless of whether that's correct or not, look at this move. Absolutely no hesitation all the way up. And we know that industrials have been hot, right? And that's what the Dow is mostly about. But that is extremely hot. That is a tremendous run. 1780, 2,000 points. That's a 14% run on the Dow Jones. Let's pop over. I want to look at some of these others with you because on those projections that we just looked at, there's some interesting things starting to set up as well. Now, when I'm talking about those ABCD structures, you know, if we were to draw some of these in, the ABCD structure here on the S&P 500, you go to the B point, you pull back to the C point, and then you push it up, right? And it's 1-to-1. Whatever the percentage difference is here, that's what this next leg is. There's some more rules associated with that, but that's something you can learn once you get more familiar or get involved with neoclassical. If we look at the Nasdaq, though, this is where it's really getting interesting, because on the Nasdaq now, you actually have that same sort of an ABCD structure, right, that actually takes you to this bar. You get the pullback to here and then the projection. And we'll just say it's right there so you can see it on the screen. That's about right. Well, what else do you have? Inside this now, you just created another one. You have one to here, back down, and it measures to almost identically the same spot. When you get two of those doing the same thing, it gives you more confidence that you're going to get there. And so you got another 2%, basically 2.5% to get to that level. And it has a good chance of actually getting there. And what's happening right now is you've got the Nasdaq starting to lead. It's been lagging. Now it's starting to lead, and primarily it's starting to lead because of the NDX. And if you look at the NDX has the same thing. Now, it's a little bit different because the NDX doesn't have nearly the strength the Nasdaq does. So in other words, the ABCD structure from here up, right, that's a pretty good one. But then you got this big pullback, so this gets invalidated, right? You have to redraw it. And when you redraw it, it looks more like this now. And so where does that go? Right about where it went, just a little bit higher than where it got to today. But now, just like on the Nasdaq composite, you just set up an ABCD structure. So which one is going to be the real one? Do we stop here or do we push up? With the Nasdaq, it seems like we might want to push up. Again, we're talking another couple percent. With the size moves we've already seen, a couple percent's not that much. But what it is a warning that we're getting close. And as I shared with members over the weekend, the mean time to failure, which I don't have time to go into tonight, but the mean time to failure on these guys also is starting to get to the point where you're going to start thinking that you might be getting to the end of the run. And, we're not talking immediately. We're talking, in early January, mid-January probably, but those are starting to set up that way. If I look over at the world markets, those guys are just starting to really rumble over the last week or so. But I want to come to the sectors, not to those. And what I want to show you here is, let's just pull up some of these sectors. Here's basic materials. Now on basic materials, you've actually got an extension that had already completed. So if we do ABCD structures again, here's your A point, your B point, projected up, already met. If you pull over and do a weekly, right, a lot of these met their ABCD structures on the weeklies already as well. And I'm doing this, I'm eyeballing this, and it looks like right there, back down, back up. This one actually hasn't quite completed, but you have multiple ABCD structures that have set up. There's another one here, goes to there, back up. That one actually completed. That's part of why you're seeing some stagnation taking place over here, right? Because once these complete, you typically get some sort of consolidation at best, some sort of a pullback at worst. When you have a very strong market, you don't get much of a pullback. You just get consolidation and then you run again. And that is what you would have seen if you were drawing this out before, say from there, right? That push up does it, right? What does it do? It consolidates and then it takes off again. And that's typically what you see with these ABCD structures, and fairly reliable as well. If we look at other sectors, you'll see the same thing, but the thing I want to stop here with and point out to you is those things that have been lagging are now those things that are leading. In other words, here's what? Consumer staples. They've been under the gun. Now they start to make their burst higher. If you look over in technology, of course, same thing, XLK. This thing had lagged tremendously. Takes off, right? Big run up. Big move in large caps. Even if we go to the beaten up healthcare sector, even this one's trying to find some legs. And you got to be desperate to move into that one, given how badly it has lagged. Okay, what else? Stocks. I want to share a couple stocks with you. Let me pop to those. One of the things is we have mentors at TA today, people that have done one-on-one training in neoclassical. And I've asked those mentors who I meet with each day to give me a couple names each day that I can share with you and kind of look at those charts with you and see what they look like. And so the one I'm going to share today happens to be, they're related, and it happens to be copper, and it's the copper miners, COPX. And if we look inside this, or actually look at this particular ETF, copper itself, we could actually look at JJC. We'll do that next. But copper miners have had a nice big run. They're getting a pullback here. You're not getting but shallow pullbacks. Now realize this is a commodity that all this is based on. It's just like oil. When you get a nice big move up in that commodity, it tends to support the stocks that are mining it, right? Because they're going to get more for whatever they bought. But if you look at this, today you did a little test of this big volume bar. So you go under it, back over it, right, after a little pullback. And that pullback was actually, if you look at the neoclassical literature, that pullback was actually right here, was told that it should try and pull back on the next bar. It's exactly what it did, right? You got over, back under, you had less volume. That's not a 2-bar reversal because it's not steep enough and it's not directional in terms of you want a steepness like that and you want a big percentage gain. So it's not that, but it's just an over-under. They're not as reliable, but that's what you get. If it can pull back more, right, you can go pick out the other places. They're down in here off these two big volume wide price spread bars. At least that one is. This one is not as wide price spread, but it's a bar. And if we draw the intersection of those guys, you got pretty good support right where you see it at the top of the green there. And if you started it here today on this test, you don't have that much to risk where you would actually put some more on. And so, when you put all this together, game plan, yeah, you can actually take a position here today, look for a continuation move. If you're a little bit early, right, you take 20% of what you want, 25% of what you want or something, and you buy more on that next move back. Now, inside this, there's individual stocks that one could play as well. And they have, of course, more gusto to them than this one does, even though this one's had a big percentage gain. And I'm talking about other miners like Freeport, which is copper and gold as well. Now, Freeport also did the same sort of test today. A little bit different setup, but the same idea. You went into a big wide price spread, high volume bar, which, by the way, the top of that bar is 1642. The bar next to it is 1635. So in other words, you got volume at the top, hasn't been tested. So you know that neoclassically it should try to come back up there and do it again. And you get your test here, lighter volume on the test. In other words, sellers come in, right? They try to push it down, and what happens? It gets bought. Sellers disappear, buyers show up. What should that do? Should try to go back the other way. Setups all over the place if you're looking and you know what you're looking for. That's neoclassical in a nutshell. That's a tiny piece of it, I guess. Actually, neoclassic's only got about 8 concepts. It's not that many. You just practice them over and over, and it's very methodical. But what do we got set up? Let's go back to the indexes. What do we got set up for tomorrow? Leaving the stocks alone. Popping the S&P chart back up here. You got a situation where you can't fight this. I mean, you're not going to short into this. This thing can continue. You got the Fed tomorrow baked in already. They're going to raise rates. What's not baked in is what they say. You got a conference afterwards with Yellen. It really depends on how the Fed wants to position itself here. Now, if you think about it, the Fed actually has the ability, given this huge rally, right? This massive rally and an economy that doesn't look too bad right now. This massive rally certainly opens up the door for the Fed to be a little bit more hawkish than you would think, right? In other words, if you were the Fed and you ever wanted a chance to really speak your mind, this is where you would do it. Will they do it? I have no idea. Are the charts telling me they're going to do it? No, they're not. Do I know we're getting close to objectives? Yeah, we are. Can they juice this thing and blow right into those objectives and hit them? Yeah, I mean, that may be the case too. So what I'm trying to say is this is a coin flip. You got trend, you got no reversals. There's no reason to go against this market. You just stay with it until you get a signal. And right now, there's no signals. Stay long, folks. Have a great one. Take care. Good night.